Hi, and welcome. This is Accounting After Dark with Professor Bennett Tchaikovsky, and I'm doing a little bit of a makeup session here for my intermediate accounting class because I had a brain flatulence and I couldn't remember something. So here we have a impairment of goodwill question. We have the Carlos division. Basically, I cash out this. These are in millions, 50 million, receivables of 200, property, plant, and equipment of 2.6 million. Goodwill of 200 million, and then notes payable of 2.7 for net assets of 350. When we're going through and doing goodwill, or when we're testing goodwill for impairment, remember with goodwill, it is an intangible asset which is recorded on our books when we are acquiring a business. It's representing the excess in the fair value. In my last video, I did something over here where we had goodwill of 160, which is really the excess of the fair value of the net assets over the purchase price of those net assets. So here, when we're looking at this in terms of this Carlos division, is that the purpose of the division is to develop nuclear-powered aircraft. It's successful, traveling delays with refueling could be substantially reduced. But today, management has not had much success and is deciding whether a write-down at this time is appropriate. Management estimated its future net cash flows on the project to be 400 million. Okay, and management has also received an offer to purchase the division for 335 million, deemed an appropriate fair value. So what we're going to do is we really need to be going through and comparing this. So is there impairment? Well, when we're going through and looking at goodwill, we're going to determine the impairment of the goodwill by comparing the net assets of the goodwill, basically over here, including the goodwill, which here is 350. And why are we saying the net assets? It's basically my assets of, this is 2.8, 3,050,000 less 2.7 million or 2.7 billion is 350 million. So my net assets, including goodwill, are going to be 350 million, okay? But what it tells me here is that management has also received an offer to purchase the division for 335 million, deemed an appropriate fair value. So what I'm going to do for this is I'm going to compare this to the fair value, okay, which is 335. Now, if the fair value is greater than, or excuse me, is less than the net assets, including goodwill, we're going to recognize the impairment. And sure enough here, the difference is going to be 350 minus 335, or 15 million. So what we're saying here is now goodwill has become impaired by this difference. So how do I handle a goodwill impairment? So the way I'm going to go through and handle this goodwill impairment is it over here on 12/30/20. I'm going to be debiting impairment on goodwill. Uh-oh. So to record the goodwill impairment, I'm going to debit impairment on goodwill for 15 billion, or excuse me, for 15 million. And I'm going to go ahead over here and I'm going to be crediting impairment, excuse me, crediting goodwill. Goodwill is an asset. I'm going to go ahead and record that with a credit. Get to here, record impairment of goodwill. So again, I'm basically taking the fair value of the assets which management deems as not cash flow, but in this case here it's fair value. I compare this against the net assets that include goodwill. And so what I'm now going through and doing is I'm impairing the goodwill. So that's the first thing I go through and do. So do I need to do a journal entry to record the impairment? The answer is yes. I debit impairment on goodwill, I credit goodwill. The second one here is it says that it's estimated that the division's fair value increased to 345. Prepare the journal entry, if any, to record this increase in fair value. Now, once I impair it, it's done. I don't go back up and write up goodwill. Once I've impaired it, I don't do anything else. So unlike assets being held for sale, a little bit different as we kind of saw that in terms of impairment. But as far as goodwill is concerned, I'm just going to go through and leave that alone. So that is impairment of goodwill. Hope you enjoyed this brief video. And if you have any questions, please feel free to reach out to me before the exam. Have a great one.